What happens when a crypto company raises over $1 billion in a single day, and Wall Street cannot look away? This is not just another digital currency story. This is about the biggest stablecoin disruptor stepping straight onto the global financial stage, and the shockwaves are just beginning. On a wild Thursday in early June 2025, shares of Circle Internet Group exploded as trading began on the New York Stock Exchange. After pricing its initial public offering at $31 per share, the stock skyrocketed to over $100 within hours. By the closing bell, Circle was valued at nearly $17 billion. Not since the wild days of biotech IPOs during the pandemic has the market seen such a first-day frenzy. Investors, big and small, wrestled for a piece of Circle, with the offering oversubscribed by a staggering 25 times. The company and its backers, including CEO Jeremy Allaire, had to increase their share count not once but twice just to keep up with demand. But Circle is not just another crypto darling. At its core, Circle is the architect behind USDC, a stablecoin that serves as a digital bridge between traditional dollars and the world of decentralized finance. As of March 2025, USDC commands nearly 30% of the stablecoin market, second only to the giant Tether, which holds 2/3 of the market. Since 2018, Circle's on-chain transactions have surpassed $25 trillion. Behind the scenes, its reserves are managed by major players like BlackRock, which holds 90% of Circle's massive reserve balance, an eye-popping $53 billion as of late May. Yet for all its impressive numbers, the world Circle operates in is precarious. Stablecoins are meant to be just that, stable. But the crypto landscape is anything but calm. Regulatory storms loom, competition is fierce, and the very trust that underpins the system is always being tested. Michael Ashley Schulman, an investment strategist, warns, Circle's distribution and transaction costs are growing faster than its revenue. It needs to become more efficient, or this growth story could unravel. Meanwhile, Avi Salzman, a digital asset analyst, points out that USDC's profits depend heavily on interest rates and the regulatory environment. If the rules change suddenly, or USDC's income keeps falling like it did in 2024, the party could be over in a flash. Let's not forget the elephant in the room, the rise of central bank digital currencies and algorithmic competitors. If governments launch their own digital dollars, or if new stablecoin technologies prove more robust, Circle could quickly lose its edge. Samuel Kerr, a market specialist, notes, right now, big institutions are moving into stablecoins for safety, but if something goes wrong with Circle or its peers, trust will evaporate overnight. So here's the million, or perhaps billion-dollar question. Can Circle cement its role as the foundational layer of tomorrow's global financial system, or is this IPO frenzy just another bubble ready to burst? The answer could shape not only the fate of Circle, but the entire future of money as we know it. But with regulatory battles ahead, shrinking net income, and rivals circling, will Circle's promise of trust and transparency be enough to win over governments and investors? Or are there threats lurking that even a billion-dollar bankroll cannot solve? The next chapter may hold surprises no one on Wall Street is ready for. So, what are the possible futures for Circle and its USDC stablecoin? The landscape is shifting fast, and the stakes could not be higher. Let's explore the most likely scenarios, and what could surprise everyone. First, if global regulators step in with clear rules, Circle might actually benefit. As Avi Salzman points out, regulatory clarity would help Circle lock in its position among institutions craving trust and stability. Lynn Martin, president of the New York Stock Exchange Group, even called Circle's IPO a bellwether for the entire listing market this year, a sign that traditional finance is watching closely. But there's a catch. Stricter rules could drive up costs and squeeze out smaller rivals, but also slow down innovation for everyone, Circle included. Second, the looming shadow of central bank digital currencies, or CBDCs, cannot be ignored. If governments launch their own digital dollars or digital euros, private players like Circle will face a direct challenge. Samuel Kerr from Merger Market notes that institutions are already shifting towards stable, less volatile digital assets. If CBDCs become the norm, Circle must adapt, either by integrating with these new systems or by doubling down on what makes USDC unique, such as its global reach and seamless integration with crypto platforms. There's also the wild card, algorithmic stablecoins. These promise total decentralization and could attract a wave of users if they finally prove reliable. Imagine a scenario where Circle races to develop its own hybrid stablecoin, blending one-to-one backing with smart contract automation. The competition could get fierce and fast. Of course, none of this matters without trust. Jeremy Allaire, Circle's own CEO, says it best. Stablecoins have the potential to do to the financial system what the internet's done to significant industries, but trust and transparency are paramount. That means Circle must keep its reserves bulletproof, disclosures frequent, and operations efficient. Michael Ashley Schulman warns that Circle's soaring distribution costs are outpacing its revenue growth. Efficiency could spell the difference between dominance and decline. So, what does all this mean for you, whether you're an investor, a tech enthusiast, or simply someone watching the future of money unfold? First, it's a reminder that the digital money revolution is no longer theoretical. With more than $1 billion raised in Circle's IPO and over $25 trillion in on-chain transactions since 2018, this is a market moving at warp speed. Understanding who's behind your digital dollars and how transparent they are matters more than ever. Second, keep an eye on the regulators. The new Genius Act, as Circle's president Heath Tarbert points out, locks in one-to-one backing and full transparency, which could become the gold standard for the industry. If you're considering the future of your own finances or business, demand that same level of openness from any digital asset you touch. Third, don't underestimate disruption, whether from CBDCs or new algorithmic competitors. The next few years will be filled with plot twists, and only the nimblest, most trustworthy players will thrive. For those looking to invest or build in this space, adaptability and a laser focus on transparency are your best bets. So, can Circle maintain trust and leadership in this high-stakes digital money world? For now, the answer is yes, but nothing is guaranteed. Circle's IPO success proves there is enormous appetite for trusted digital dollar solutions. Its partnerships, like BlackRock managing over $53 billion in reserves, and new regulatory frameworks, give it a big head start. Yet, the dramatic drop in net income from over $267 million to just over $155 million in 1 year shows how quickly fortunes can change. Here's a secret not everyone knows. While everyone is watching the price of Circle's stock, the real battle is happening in the back end, fighting hackers, policing reserves, and racing to onboard the world's banks and businesses to digital rails before rivals or governments do. That's where the future will be won or lost. If you found these insights valuable, make sure to subscribe, hit the bell, and share your thoughts below. Which digital dollar would you trust with your savings, and why? Let's keep the discussion going. The next chapter